B3 here as usual. We're going to talk about a little different topic today, not the typical transportation rigmarole that we usually go with. We've got Phil Johnson with us, who I call a forensic workers' comp specialist, but I think the accurate title is what, premium review and recovery program, Phil?
That's correct.
But yeah, I mean, in a nutshell, I just talk about some of the services that you bring to the table with respects to the workers' comp and how you work with our current client base, our prospects, and how to help them in the big scheme.
Sure. So I was hired by Risk Strategies, now part of Brown & Brown, to start our workers' comp premium review and recovery program. The concept being we're going to go back and review the last 10 years of an employer's paid workers' compensation premiums, identify any technical mistakes the insurance carriers might have made. We contact the underwriter and or auditor, have those errors corrected, and the return premiums are sent back to the client. We're paid on a contingent basis after the client gets their money back. And I guess the basic concept is we really truly believe that the employer should only pay those premiums that they rightly owe. And if in fact the carrier made a mistake, we would want you to get your money back. And one last kicker for us, if we place the policies, that being we, Brown & Brown, or Risk Strategies, there's no fee for our service. Again, we believe you should only be paying those premiums that you rightfully owe. Time in. From an error standpoint, there's a pretty broad cross-section of mistakes the insurance companies. I guess one of the interesting questions that I often get is, why does this happen? And I would say that as a general statement, insurance is a forward-looking product, that we're looking at the program that you've got right now and what's right for you now and what's right for you on the upcoming renewal. There's very little retrospective review. And so that's a real differentiator for Brown & Brown and Risk Strategies in terms of our willingness to go back and review these things to make sure that you've gotten proper credit for any potential errors that are made. We're successful for 3 out of 4 clients. And that means 25% of the time we're going to come back and say, to the best of our knowledge, you haven't paid any additional premiums. But 3 out of 4 times we do find money for clients. And that can be significant. We've had significant 6-figure recoveries for clients, and we have recoveries that are 1 or 2 or 3% of your annual premium. Again, it's money that you're entitled to. I think one of the interesting comments is when we do make a significant recovery for a client, most of the clients are quite surprised because they just never thought that kind of a recovery was possible. And it lends to our due diligence and our willingness to dig into the details to make sure that they're being charged the proper premium. One of the qualifiers for a good client for us, higher mods are always better. From our perspective, from an insurance perspective, they're obviously not better. But from ours, that means there's more activity. There's more touch points from underwriting, from claims, from audit, even from the broker standpoint. So the more times that people actually handle and work within the workers' comp policy, the more opportunities there are for human errors. And a lot of the mistakes that are made are just that. They're human error.
So that's pretty common with the human error. I mean, again, the more losses, the more frequency that you see on a loss run, the more chances that there probably is an error.
I'll give you a quick example. Today, I got a client said, we have this claim on our loss run, but it happened before we took over this account. And why are we getting tagged with this? I'm like, well, we can solve that problem. Again, sometimes it's a function of feedback from the client too. If you're talking to a client, almost every employer has some type of a nightmare story about workers' comp. It's a claim that shouldn't have been paid, claims that are running through a factory like virus because they see somebody with an attorney that's gotten a big settlement. It's just something that needs to be monitored and stayed ahead of. From a client standpoint, our typical client pays anywhere from $100,000 a year to $2 million a year in either a guaranteed cost, a retrospectively rated, or large deductible program. Typical industries would be transportation, construction, distribution, manufacturing, healthcare, even human services. The kind of the tying string that brings all those together is that there's exposure to loss. Usually can be fairly significant. I mean, I'm not talking about roofers, but transportation's a big one. Anytime there's a higher rate, that means that there are more claims associated with it, and there's higher premiums. What else can I tell you?
Talk to me about in terms of risk to the client. There is none.
Yeah, no,
Correct.
it's a zero risk opportunity. If we don't generate recoveries for them, there's no fee for our service. We're not paid until after they get their money back. We keep them in the loop throughout the process with regular emails. Sometimes we'll reach out and be like, hey, can you tell me a little something about this claim? Or, your classifications changed 3 years ago. Do you know why? What happened? And what was the timing on that? So we'll request all of this information directly from the insurance carriers. And oftentimes they'll send it to us, but more often than not, they'll email it to the client who can then forward it to us. And
I guess
that's
my next question would be how much
time commitment.
What's the time commitment on the insurance?
Sure.
Because time is money, right? So
our average time commitment for clients is about 10 minutes total. That doesn't include driving checks to the bank, but it's literally signing 2 letters of authorization in our engagement documents. We get your experience rating worksheets from the relative bureaus, whichever ones they are. We get premium and loss data from the insurance carriers. So the mod sheets give us a roadmap. They tell us every single carrier the clients had, every single claim that they've had, and then you'll also see changes. I mean, if you do this all the time, you see them, but you'll see changes between claims going up, claims going down, claims disappearing, classifications. If you see on an audit 000 on the end of a classification, you know that that's not right, because nothing ever ends with 000, which means either that they paid too little or they paid too much, but it's not right, and that's something we want to look into.
Right. Yeah, it seems like a no-brainer to me. I don't know why more people aren't taking advantage of this type of a service.
I think I'll speak as a general statement. The insurance carriers aren't going to do it because they make more money by charging more money, and there's no profit. There's no profit for them in going back. Most brokers, again, as I said, are forward thinking, and there's a balancing act that we've got as brokers between representing the carriers and representing our insurance. Now, you guys have more of a balancing act than I do, because really my function is singular. I'm literally just going out and representing to the insurance carrier what should have been charged, no more, no less. And I've had carriers, ask me about statute of limitations, and I said, that's great for a court of law. We're just asking you to charge the correct premium. It's kind of, and in the big picture, if we can get back between 5 and 8% of an insurance premium in 3 different periods, in relation to the total that they've paid, that's pretty small, but it can be a pretty substantial amount if they're paying $250,000 a year for workers' comp. That could be a $30,000 to $75,000 premium recovery, which again goes right to their bottom line.
Yeah, it's real money. Absolutely.
Yeah.
And again, for 10 minutes of their potential time.
How far back normally, Phil, are you going on these audits?
10 years, honestly. If I could get more data, I'd go back farther. We had a recovery this year for every single policy period for a client from 2017 to the current.
Wow.
That, in my opinion, that's kind of a systemic broker problem.
Yeah, what happens with that? Like, that's my question. So you go back, you look at this, you say for the last 9 years, right? How, one, that's a huge flag, I guess, for the broker they've been working with, right? And it's a huge flag on the insurer itself, right?
And I don't, if my nose looks flat, it's because I do get pushback. There are brokers that would rather have their clients fat, dumb, and happy than ever consider the possibility of premium recovery. For this client that I just mentioned, literally the broker tried to get us fired 2 weeks after we started. And I had identified enough errors within the first 2 weeks that they kept us on. But that review, which was twice what it should take, took a year. We're just getting paid on it now from work that started in February of last year.
Wow.
So a typical review will take anywhere from 2 months to 6 months. At least 60 days of that is processing on the billing. If I have the correction in front of me today and I send it to the underwriter, it's still going to take 3 months.
Yeah.
It's got to go through underwriting, through audit, through billing, then get sent out in 30 days or whatever the timeline is.
It's weird they're not in a rush to give back all the money.
The only thing that happens fast in the insurance business are claims. That's it. Everything else is slow.
What about
what do you think if you had to shoot from the hip? What's the total amount you recouped for folks in 2025?
$500,000, maybe a little more. Had one very nice hit for a client that is Iowa, Illinois, Missouri, that they were profoundly misclassified. And in that case, we got them $265,000 back on their workers' comp. And then they really liked the way that we operate and do business. And one of our producers actually writes the employee benefits, and they asked, can you do our property and casualty as well? And we said, we can work with that. Yeah. So we picked up $185,000, the property and casualty, and everyone was happy.
Yeah.
That's great.
Is there anything that's too new? Like in terms of they've only been in business for a year or two?
Well, so disqualifiers would be composite rated programs, captive insurance programs, and self-insured programs. Primarily because any mistakes that are being, for composite rated doesn't make any, there's not a lot that can go wrong. All they're doing is taking their gross payroll, they don't care what the people are doing, and applying a blended rate to that. And everything else is irrelevant. I think my favorite are guaranteed cost, because it just lays it right out in front of you. Here's what we're going to charge you. Here's what you're going to get paid. And it's a very regulated part of the insurance business.
Right.
Despite what people think, you can't just come in and change someone's classifications at audit, but it happens all the time. And the new classification change that the carrier is suggesting, it might be right. They just can't do it at the audit. So that's a pretty common error.
Got it. Wow. Well, it sounds like there's no downside. If it takes 10 minutes, you can make back 5 to 8%, and you just have 2 little things to sign. I can't believe, everyone's not knocking down your door. Can't believe you have time to talk to us today, Phil.
Well, I did clean up my desk before I talked to you. So.
Excellent.
Well,
I thank you for joining us. Hopefully we send some business your way based on getting this out there and seeing who's interested in having you take a look at everything and finding some money.
Sounds great. And honestly, if someone's got questions as a follow-up with you guys, happy to take a call. I've never received a question that I wasn't willing to answer honestly.
Awesome. Cool. We appreciate it. Thanks for joining us.
All right, guys. Have a great day.
Thanks,
all right,
Phil.
take care.
Thanks, Phil.
Bye.